Hello, my name is Ben Decker, and in this video I'm going to go over a 0 days till expiration short Iron Butterfly trade in SPX. You may also know it as the Olsen Iron Fly. So before I get started, just a quick disclaimer. Options trading involves risk. You and only you are responsible for your trades. This is an advanced option strategy that only expert level traders should be putting on, and none of this video is a trading recommendation. Alright, so for this demonstration I'm going to be using tastyworks, which is what I use. If you use Thinkorswim, then the management parts can be a little bit different, but I'll touch on that later. So why do we choose SPX? Well, first off, it has an extreme amount of liquidity. So you're able to do multiple contracts and there's not a lot of slippage between the bid-ask spread. This was the Friday close, so it's a little bit wide, but it's pretty tight during the day. It's also a larger product, so the credits, which means the profits and also the losses, are larger, so it's a little bit more worthwhile to do an SPX than something that's smaller. SPX also has the 60-40 tax advantage, where 60% of your long-term gains, or 60% of your gains are taxed long-term and 40% are taxed short-term. And the biggest one is that SPX has daily expirations, which means every Monday, Wednesday, Friday there are option chains that expire. So you can do this 3 days a week, even if you're under the $25,000 account. You can do one trade every Monday, Wednesday, Friday. As long as you don't leg it in and out separately, you can do one trade per day, Monday, Wednesday, Friday, and you don't trigger the pattern day trading. So that's nice as well. I would recommend having at least $20,000 in your account when you trade this particular strategy. If you have less, then you run the risk of, if something does go wrong, of blowing up your account, and no one wants to do that. So make sure you have enough money in your account. If you do have a smaller account, there are some alternatives to SPX, though not as good in my opinion. First off, you could do the E-mini S&P 500 futures, which is /ES. So it's the same price basically as the SPX, but the credit is half the size. So your size would be half as much, but sadly with futures on tastyworks, the fee is double. So you're taking in half as much and you're getting charged twice as much. So it's not as efficient as SPX. You could also use SPY, which is S&P 500 ETF, which is 1/10 the size of SPX. This is what I used when I first started. I think it's a good way to get your feet wet and practice this strategy without putting a lot of money up front. The main problem with this is the fees really eat away at your profit. So long term, you're going to want to do this in SPX. So let's get started here. So SPX, for this trade strategy, it's a short Iron Fly, and we're going to do it in the 0 day to expiration. So come Monday, this will be the 0 day expiration. So with your Iron Fly, you start out with shorts at the money. So right before market open, I'd put this in the options trade a little bit before market open at 8:30 Central, so you can kind of guess where it's going to open up. So let's assume that's going to open up at 3,100. So we put our shorts at 3,100, and for this strategy we want to do at least $50 wings. So for this it would be 3,150. So that's going to be a 275 mid price. So wider than $50 is going to be more beneficial, but it's going to take up more buying power. So, and you can see with the buying power without doing wings, which is why we do a Iron Butterfly instead of a straddle. So $50 on the call side, go up by the $50 wing on the put side. And you can see all the put skew in here too. So this is marking at 34.50 with a max loss of 15.50 if you hold it. This was Friday's at the close price, so Monday morning this will be probably closer around 30. But for this scenario, let's assume we get filled at 34. So what I would do when I'm putting this in is right at 8:30 I would keep looking at where the SPX is, and I would hover around the mid price, and I usually wait every 5 or 10 seconds. I'll replace the order and I'll down tick by a nickel, as long as the price is pretty steady, and that's how I'll get filled. So for me, I want to get filled as close to 8:30 Central as I can. Reason being is the first couple minutes is when that there's a pretty large premium decay, so you want to take advantage of that. So let's assume we get filled at 34 bucks. So what does that 34 bucks mean? Well, basically if SPX moves less than $34 up or down, we'll be in the profit zone. So keep that in mind for our stop loss. But first, let's very briefly talk about doing a closing order for a profit. So for this trade, we're looking for about $1.50 out of this. That's what Jim has found in a lot of different volatility markets, that you're in and out in about an hour. Right now with this higher volatility, it's usually less. But $1.50, you're in and out pretty quick. Take your profit and you're out of the market, which means you don't have risk the rest of the day. So you should know, if you're using tastyworks and if you're doing the strategy, you should know how to do a closing limit order. So let's just say put in the order. If this was SPX, you would highlight all your legs, right click, close position, put in 32.50, which would be your $1.50 profit, and you set that. So that's the easy part. If that hits, that's great, because that means you made a profit. But the biggest thing with this trade is managing your risk. So obviously, if we didn't do anything, our max loss would be 1,600 bucks, and that's a pretty big chunk of change if we're trying to take $1.50 out. So we want to set it up so our stop loss triggers if SPX moves up to 31.34 in this case, or 30.66. So in Thinkorswim, you can actually punch in those numbers and set it up so if SPX hits those that amount, so if it goes below that or above that, which would be a larger move than what you want, then it triggers a market order and you're out for a loss. And that's to cap your loss so it doesn't get out of control. Unfortunately, tastyworks, you can't do that. So the way that I do it, and I only put on this trade if I am available at my platform during the first hour and a half of trading. So what I do is, if you do the right bar here, go to alerts, you can set an alert. So in this case, I would do 31.34. I would do greater than, create alert. So this will send a message to my phone. It'll shoot me an email, and there'll be a pop-up. If SPX goes above 31.34, it'll alert me. And if I get that alert, the biggest thing is staying mechanical, keeping emotions out of it. If that triggers, I would immediately go into the positions tab and close it aggressively. So I would try to get out as quick as I can to avoid the big loss, and just not think about it, just do it, because if you think the market's going to come back and it doesn't, then you're going to be hurting a lot more. So I only did it on the call side, but you could also do the less than 30.66, create alert, so then you have your bounds here. So if SPX goes outside of these bounds, you get alerted, go in and manually close it. So that's the first way. The second way is if you want to watch on the chart, you can go on the chart and you can manually look at it. So for the chart, I'm just going to use my Friday trade example, just so we can see. So on Friday, SPX opened up here. So I got in, my short was at 31.50. So if we go in here, add a price level to about 31.50, that's close enough. So that's where I got in, and I got in at 8.32. So I'll do another time level here, and at 8.32 I got in. So this was the point that I got in. So what I would do, instead of doing alert, or actually you could do an alert too, but you could draw lines on where your level is. So the first level was, so this one actually, let me check here. So Friday's trade, I took in a credit of $21.60. So with my shorts at 31.50, my low bound is going to be 31.2840. So 31.2840, that's close enough. And on the upside, it's 31.71. So this is off the chart. If it's off the chart, you can hit this gear here, and you can move this up, expansion area up. So 31.71.60. So I'll go just below it. So if I'm looking at the chart, if any of these candles ever dips below or above these lines, I'm going to get out. So if I zoom out here, you'll see if I stayed in this during the day, the SPX went way below. So just think, if it would have stayed down here, I would have had a huge loss. But luckily, my trade got out for a $1.50 winner right in here somewhere at 8.48. So right here is where my $1.50 order triggered, and I took my profit and I ran with it. So rest of the day I didn't have any risk. I didn't have to worry about losing money, and it was great. So tastyworks isn't as good for managing the stop losses than compared to Thinkorswim, but you can do it. You just have to be at your platform. So that's in essence the Jim Olsen 0 days till expiration SPX trade. Like I said, you can do this every Monday, Wednesday, Friday. Put it on right at market open, take it off, hopefully within an hour, hopefully for a profit, and you're done. And the nice thing about this with SPX is you can do, as your account gets larger, you can do one contract, you can do 2, 5, 10, whatever, and that's a nice way to increase your profit. And one thing to note, typically if you're going to get stopped out, barring a huge drop, which you can see here, so if this would have happened right after I opened, my trade would have went negative pretty quick. So barring that, typically a loss is going to be no more than $500. But don't hold me to that. Every day is different, and history doesn't determine what the future is going to happen. So one thing to note too, if something like this were to happen, Something I might consider would be to keep my position on and try to hedge it with either the /ES futures or the micro futures, so that if the market keeps going down, I can make money on the hedge. But that you don't have to. That's just an idea. I think getting out for a stop loss would be the best case scenario. So hopefully you guys thought this video was helpful. If you have any questions, I can do other videos to elaborate on anything. So if you have any questions, leave comments below, and if you would hit subscribe, that'd be great so you can see any future videos. But other than that, thanks for watching.